Guys, welcome to Gold Price Daily Analysis. Today is Tuesday, 19th of March 2019. This video is brought to you by the coach. Remember always, our job is to make you rich. If you are a new subscriber, welcome aboard and thank you for joining us. If not yet, please hit the subscribe button. We'll start our core analysis right after a quick recap. We did not have any data or important data to be released today, but what we have mentioned in our last episode, we have really issued a trading signal on last Friday to buy the gold on market rate around 1,302 with a target of 1,321 and a stop loss of 1,288. This signal is still valid and is still active. On the economic calendar for Tuesday, we have the following headers. From the United Kingdom, we are waiting for the average earnings index bonus and the unemployment rate and employment change and the claimant count change. As you see, we have labeled them as market movers. Moving on to German, we are waiting for the ZEF current conditions for March and ZEF economic sentiment with medium to high importance. From the European Union, we are waiting for two headers only, the ZEF economic sentiment and the wages in Eurozone, also with medium to high importance. Moving on to the United States, we don't have that much of news, but we are waiting for the red book month to month and year to year, plus the factory orders month to month for January. Moving on to the technical analysis, for the last trading session on Monday, we got a trading range from 1,298 to 1,306. The numbers are rounded and the market is still open. The closing price, we expect the gold spot to print a closing price around 1,302. Also the market is open. Moving on to the moving averages, we have the moving averages for the 20 days at 1,310, for the 50 days at 1,304, for the 100 days at 1,271, and for the 200 days at 1,239. We are still above the 100 days, 200 days daily simple moving averages and below the 20 and 50. Moving on to the RSI, for the 1 hour is 51 in the favor of the bulls, and for the 4 hours 54 also in the favor of the bulls, and for the 1 day it's 49 in the favor of the bulls. Actually, we have a good setup, bullish setup to move up higher. For the supports and resistance, we have the supports at 1,300, 1,296 and 1,292, and the resistance are located at 1,306, 1,313 and 1,318. That's it for the technical indicators. We'll move on to the strategy. Before going through the trading strategy, we got to mention that there is a FOMC meeting on the coming Wednesday. We do expect the Federal Bank, Reserve Bank, to talk about the one rate hike instead of two rate hikes expected by the market during 2019, and affirmation of a continuity of the patience to until the rest of the year. We don't expect the dollar basically to show strength as usual. For one more interesting thing to mention, that according to Basel III, gold is going to be considered as cash equivalent asset for the commercial banks when they calculate their capital or financial proficiency for lending, and this is something good for the gold. And actually there was purchases by the commercial banks done during this month of physical gold. Moving on to the trading strategy, the trend is bullish, the price action is positive. We are under 20 days, 50 days daily simple moving averages. The US dollar is under pressure, as we have seen on the last trading session on Monday. Couldn't hold the ground, and our advice to you to stay on the buy side. Any drop in the price is considered as a good opportunity to enter the market as a buyer. First target as 1,321, and the stop loss should be at 1,288. We do expect that the gold is going to break this price channel, which we are stuck in for the 3-4 past trading sessions. We do expect the gold to break this channel to the upside above 1,310, and we are explaining this price action as gathering base and strength to move up higher. This is all for today. Please share, like and subscribe, and I will see you tomorrow.